Welcome back then. We just had Century Textiles numbers that are flashing on the screen. The large chunk of their business, remember the cement business, is going to be folded into Ultratech Cement. So these numbers are of lesser importance right now. This is what is remaining in the company. If you're looking at the numbers, well, the bright spot would be the pulp and paper business. So there the margins are doing much better. The EBIT out there has come in at around 141 crores. So that's very, very good news. And that explains why the margins have come in high. But you can't really look at these numbers. They're not really comparable as well on a year-on-year basis. The textile business as well, one of those plants have been transferred to Grasim. So that's why you're seeing such a big downtick in terms of revenues out there. Important part for this particular company will be when is the record date and how many shares do they get of Ultratech Cement. I mean, we already know that number, it's in the ratio of around 8:1. So we'll keep an eye out on that front. And with Ultratech Cement not doing very, very great, that's why we've seen the stock, in fact, correct from around the 1,000 rupee mark all the way to around the 800 rupee odd mark from the time that this particular deal was announced with Ultratech Cement. But let's move on then. We have the management of SIS with us. That stock is on our radar after the company picked up close to 60% stake in a Singapore company for around 350 crore rupees. Mr. Rituraj Sinha, the Group MD of Security and Intelligence Services, joins us on the phone line. Hi, Rituraj. Thanks so much for joining in. Well, you do margins of less than 5%. Talk is that the margins of this acquired entity are far higher than that. Is it close to the double-digit mark, or is there some one-off out there?
Well, thank you for the opportunity. I'm very pleased to share that SIS has signed definitive agreements to acquire Henderson, which is the third largest security solutions firm in Singapore. It also happens to be the fastest growing in the Singapore market. They have maintained a 14% annualized growth rate for the last 3 years back to back. And coming to your specific question around margins, Henderson maintains a 12% EBITDA margin. So it is definitely a very valuable asset.
So that's much higher than what you're doing currently. That 12% is a sustainable number, or is there any one-off out there?
Well, for the last 3 years, they have been around that 12% mark. So I think it's quite sustainable. The asset is also a debt-free asset. There is zero debt on the books. And last year it generated OCF, operating cash flow to EBITDA, of almost 75%. So by all means, it's a very, very worthy target.
What would your cash balance look like after this acquisition, Ritu?
Well, this deal is entirely funded, 100% debt funding through the Australian balance sheet. So the cash position in India does not change at all. This is funded through the senior secured acquisition finance line out of Australia. And we are funding this asset at 5% rate of interest debt. So I think this will be substantially accretive both on EPS and on return on equity basis.
Okay, but on a consolidated basis then, what would be the debt on the company's books now post this acquisition?
I think our debt will still be around 1x gearing, more or less.
Rituraj, you bought 60% stake, right, in this company, Henderson, as you told us, third largest in Singapore?
That's right. It's a two-stage transaction. Yeah.
What about the remaining 40%? Is there a clause in there? At some point of time, you go ahead and acquire this remaining 40%, and at what valuations?
Absolutely. There is a path to 100%, which is clearly documented. There is a EBITDA CAGR linked performance ratchet, which has to play out, and we believe that with the order pipeline that this company currently has, and the strength of the management team, which has been running this business so efficiently, and also the fact that for the last 10 years, they have a grade A license in Singapore. So I think all these three things put together, I think they are well poised to do well in the coming years. And basis EBITDA CAGR, we will acquire the remaining 40%.
Okay, just one final word. What would FY19 revenues for the company look like? Because you have been making a lot of acquisitions. Any target for FY19 as well as 20 in terms of revenues?
well, the exact number would only come out in the next quarter, but I think we are well on track to be a $1 billion annualized revenue company, and very much in alignment to deliver, our guidance around the 20% year-on-year growth, 25% return on capital employed, and greater than 50% OCF to EBITDA. So we are on track as far as that is concerned. And I would also take this opportunity to share with all the viewers that SIS now has become a part of the top 10 globally in the security services space, with that $1 billion annualized revenue mark. And in that league of top 10, we are clearly the fastest growing amongst the global top 10.
Okay, all right. Thanks so much, Rituraj. All the best for the remainder of this year, and hoping you hit those targets that you're promising us as well. The stock more or less flattish, margin accretive as well as EPS accretive, as Rituraj just told us. Slip into a short break. You come back, we'll turn the spotlight on earnings, Escorts and Tata Power. Both of them will be stocks on our radar. Stay with us.